Hey there, traders. Welcome back to another daily recap. We're looking at trades in the S&P 500 E-mini futures that are based off levels of support and resistance in the SPY. I'm Sam Morton. Today is August 15, 2024. It's about 8:22 a.m. Eastern currently. The opening bell is in more than an hour from now, but from what we're seeing in the pre-market, the SPY is poised to gap a little higher at the open. They've been pushing up to around 545 and slightly higher so far, but where they open in an hour or so could be somewhere else, of course, but they're currently up against resistance, and it could be interesting to see them open above this important area. If that happens, like if they open significantly higher, that could mean they're more bullish, but if they give into that resistance area, then they could fall. Whatever happens, we have these levels already identified. We'll use them as our baselines for entering trades in the E-mini futures today. After the market closes this afternoon, we'll come back to this same chart and we'll talk about any trades that may have resulted from these levels of support and resistance. Catch you then. So it's been over 12 hours since the market opened. Of course, it's closed now. And where is price? So they opened above the highest level we had over here at 548.60 and took off. I did have an order to buy if they got down into 548.60 here. I was recording the would-be trades, but nothing happened. They never got to the level and they took off. So at some point I just walked away, didn't worry about anything. So after the fact, looking at it just 15, 20 minutes ago, I found this level here and I'll show you where it came from. And it's kind of interesting to see what could have, this was not a trade I took, but I just want to point out where it came from and what you could have done not take the trade. I'll show you in a minute. So first, where did this level come from? So here's the daily chart. So when they opened above our highest level and they went higher, this is the 75% retracement from this move from this high to this low. They're on their way back up. So they gapped above a very important area this morning. And so this level here would have been something that could have been a viable. I mean, this is the high of this kind of breakdown area here. It happened to coincide with, close to this 75% Fibonacci retracement. Well, 551.44 would be 551.40. I would just basically bring it down a few pennies. So 551.40 was where that level came from. So that should make sense now. So if you were to trade this level, I just want to talk about something. This could be a learning experience here. So I'll take off the snap mode here. So what you're looking for is a bounce. If they hit 541.40 in the SPY, trigger a trade at the market in the E-minis and bounce down to 551 even, right? That's 40 cents, which is down here. So this is your target. And I'll go ahead and put a fumble threshold, 551.80. That's 40 cents above price. So if they close a certain amount of candles above this level, then something else is going on. So anyway, what did they do? They came up and they hit this level. They went a penny above it. So 551.41, that would have triggered a trade greater than or equal to the level, then sell at the market in the E-minis. And they came down, where did they come down to? They came down to 551.08. So 8 pennies above this level before they took off. Within a few minutes, they were back up at your area, the entry point. So really, that's the trade. I mean, if they get within 10 cents of your target, your profit target, you kind of want to second guess the trade because they're obviously bullish at this point. They opened high, they gapped above an important area, they're continuing higher. So since this would have not worked, then you would have jumped out. This just a little lesson here, how I look at this. So let's say that was the level. There's a good reason that's the level. Obviously, I showed it to you as a 75% retracement of a pretty big move. And it would have been triggered. It would have been nice. It would have been in the money, 100% down to here, and then they wouldn't have given you the base hit and pulled away. So you would have jumped out at a wash at this point. Just a little lesson here. Of course, you can see how they respected this level. Again, would you have taken this for a recycle? I don't know. Not enough time had elapsed. Then not enough time here, but they'd already hit it a few times. I don't know what they're going to do. They could fall down, but this level worked from a long position side, and they continued higher, and they closed pretty good on the day. So where are they going? That's the big question. Maybe we can talk about that later. But in terms of our levels that we had on the board this morning, nothing was hit. No trades were taken. So over on the tracking log, it looks like this. This is the playing by the rules log. Here are the levels, nothing hit. Little note there. Then the personal trades, same thing. But now you can see the daily averages, the averages per hour, totals, and so forth. Playing by the rules, personal trades. But that's it. Nothing exciting today. Well, it was a kind of interesting day. I thought it would be. One thing I want to point out, the area I talked about a week ago, I think it was Friday of last week that I said that if they get to this point by Thursday or Friday of this week, so I gave it a week, then they had a decision to make. Well, they gapped above that area this morning. perhaps the best thing to do is just go back to the video that I posted, I think it was on Friday of last week, where that level is identified and the timing is more of a convergence of price and time. Well, they're above that level, so that looks pretty bullish, and they still have a little bit of resistance to get through before they can go higher, but we'll see what happens in the morning. Once again, we'll have levels in the morning identified, ready to go before the opening bell, and we'll do this again tomorrow. Have a great rest of your day.